an increase in collection efforts, and what kinds of collection efforts?
Yeah, so certainly we saw a rise in 7% in bad debts, but interestingly, our credit loss ratio, or how much are we writing off for every 100 Rand that we lend, was roughly flat at 1.06% compared to 1.05% the year before. What we saw was a deterioration in the first 6 months, where our credit loss ratio went to 1.3%. We had a couple of single bad debts in our wholesale businesses, and we were also much more conservative in our personal loans provisioning in the first half. And then in the second half, we did have a much better experience. Our defaulted advances came down 14%, and we have significantly ramped up our collection efforts, put more people into the collection space, probably added 30% in the personal loans environment, and we had a much better outcome with bad debts in personal loans peaking in the first 6 months of the year.
Going forward, can we expect more of the same activity?
Yeah, so we have a target range for our credit loss ratio of somewhere between 80 and 120 basis points. That's the number that was 1.06% this year. And what we've said in our guidance to the market is that in 2014 we expect a slight improvement on that 1.06%.
Does that mean the consumer's better off? Or is that just because you're running the business?
Yeah, so really what the outcome of bad debts is to do with what you have strategically done in your business over the last few years. And what we've done at Nedbank is we've been much more selective in our lending criteria. So we shrank our personal loans book 10% during 2013. We've also shrunk our home loans business, and we know when interest rates rise, generally your home loans business has the highest rise in bad debt. So we think we've positioned our business well for a rising interest rate environment, both in how we've selected our assets, but also in taking higher impairments in 2013, because the consumer still remains under pressure, and we think as interest rate rises, that pressure will increase.
Business banking, have you increased your share in that market?
We have. Nedbank is a very strong player in the business banking environment. Traditionally, we've held probably 15 or 16% market share there, and it's very hard to measure market share in business banking, but certainly we think that we've lifted that to closer to 20% over the last 2 years.
The number of new customers you've attracted, new deposits, I should say, compared to total deposits, how's that going?
Yeah. So certainly we've been very focused on what we call growing the franchise, getting new customers to join Nedbank. During 2013, we welcomed 530,000 new customers to Nedbank. It's about 9 or 10% growth, so we now have 6.7 million customers, and we've had about 9 or 10% growth in our deposit franchise as well.
So it's very much on par with each other.
Correct.
Investment banking, it's one of the thorns in South Africa's side. We're supposedly not that attractive an investment destination. But locally, what's happening with investment banking? How does that compare to other jurisdictions?
Well, I think there's a slight difference between your attractiveness as an investment destination, and clearly South Africa at the moment is battling with global sentiment that is more in favor of developed markets than emerging markets, and in particular negative sentiment towards emerging markets that are running both current and fiscal account deficits. If one then moves to investment banking, you'll see Nedbank Capital, which is our investment bank, had an excellent year. They grew their profits about 20%. And for us, South Africa still is our dominant market in investment banking. Almost all of our global markets or trading businesses take place in South Africa. And then our lending businesses are both in South Africa, where we saw very strong growth, particularly off the back of something like the renewable energy projects that have been launched in South Africa, where Nedbank got a particularly large market share of those. But increasingly, our new lending activities in the investment bank are targeted at the African continent, where it's still much smaller than Nedbank in South Africa, but there are higher rates of growth.
And there's higher demand.
And there is higher demand at the moment, but all of these things are cyclical, so it is important for us to maintain as much focus on our South African domestic franchise as it is to focus on expanding in the rest of Africa.
Great. Thank you for your time, sir.
Thank you.
There we have it. Mike Brown, Chief Executive Officer at Nedbank.